Hello traders, Gary Wagner here, just about 10 o'clock in Honolulu, 4 o'clock in New York. It is Thursday, the 20th day of August, 2015, and this is the daily report for gold and silver. We have the precious metals up and away, trading dramatically higher on the day. Current print that you can see on the screen is roughly 1151, 1152 in that area. Now we've seen it trade as high as 1154, as low as 1132, and as I said, currently call it 1151 and change. Silver also trading higher on the day, up about 27 cents. That's trading at 1546. With a low of 25.50 and a high of 1556. We did send out a special trade alert. Let's get back to our gold page, recommending that you can initiate a long position. Now, I did that under the pretext that this market had broken above a key level, and that was really 1151.70. Let's go ahead and pull up that chart. And as you can see, I've pulled up a half a day chart, standard candlestick format, and the 1151.70, that price point that I'm speaking about, is a 50% retracement. Now, it is a retracement from these lows at around 1071 up to the highs at about 1230. And when we do that, we get a 50% retracement at 1151. Now, the point in which we talked about entering the market was based on the following. Of course, we entered the market 1105. We put in a price order yesterday. I know some did not. They were much better off because we did miss a good portion of this last move. But we got out at roughly 1128, and after we saw this market close, it closed right at this point. Overseas, though, last night, it started trading dramatically higher, and as of this morning, had already broken and had broken above here, was trading roughly 1152, 1153 when I put that call out. Now, based upon the fact that we were trading above this particular price point, to me that was not only a continuation of the breakout, but it told me that there was a real opportunity that we would see it go to the next level, and that target is roughly 1170. There's another thing of critical importance, and that is the relationship in terms of the price point, that area around 1150, and our real long-term studies. Let's go ahead and put that up. And traders, this is the chart that I was talking about. This is a very, very long-term study. We're using a monthly chart for this study because really what I'm trying to analyze is the retracement levels based upon the move from just under 700 to over 1900 per ounce. And when we do that, we get this 61% retracement at roughly, call it roughly because I believe that it's a band, but roughly at 1156. That's this area right in here. Now, market's currently trading at around 52.26 as of this moment, and so it shows that we're very, very close to really breaking above this price point. And the key to me is that if it breaks above this price point, then it's telling us that we could be looking at a couple of different bullish models. Of course, this last recent move is a result of a couple of factors: uncertainty of global economics, so safe haven plays, but also a real belief that with the numbers that have just come out and what is going on with our equities markets, and most importantly deflation, that the Fed will most likely not start rate hikes in September. They'll postpone it maybe December, maybe January. That is now being factored into the market, because prior to this, what was being factored into the market was a rate hike was most probable, or possible, I should say, come next month or September. And now that the belief is that that might not happen, well, that's where we are getting the potential for higher pricing in gold. Now, in a long-term basis, and this was one of the numbers that I went over in Chart This that you should have gotten a notification and watched this morning, but one of the things that we'll realize is that when we look at this in a long-term basis, the next point after that is just at around 13 1300 per ounce. And so that would be a real long-term window, but that would be a target that would be achievable on a long-term basis if, in fact, we can go back and implement a bullish model. We'll have to see how that pans out over the next few months towards the end of the year, because as I said, this would be a much more long-term view of the market. So traders, what about silver? As you know, on this most recent call, we have only included gold and not silver into the mix. One of the primary reasons was the volatility that we have seen in the market, the lack of liquidity, but we do have an interesting scenario brewing, and I draw your attention to this chart. It's a daily chart, 50-day moving average in the chart, and you can see without a doubt, let's go ahead and blow that up. We've had a gap above on today's trading. Again, this is a daily chart, but on today's trading, we've had a gap above this 50-day moving average. Now, the one thing that we can see is that it has been a very, very strong determinator in terms of giving us a strong indication of the market on the downside. As long as it's been under this 50-day moving average, as you can see here, we've seen defined downtrends. Now, we have had the market go above that, but in the recent activity that we've seen, silver's clipped above it here, quite substantially above it. But on these last two occasions, we've seen nice clips, but in terms of the duration, they've been extremely short-lived and then way back below. So the fact that we are now above this 50-day moving average has absolutely gotten my attention, and we might add it to the mix in the days to come. But I want to see that it maintains above this particular price point, that of a 50-day moving average. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the weekend review. Bye-bye.